Good morning, I'm Michael Gable from Fairmont Equities. I just wanted to give you a quick update on where I think the markets are heading to from here, the US market, as well as the Aussie market. But just before I start, just remember any advice here, of course, is general only. But we'll have a look at the, we'll get straight into the chart. So this is the S&P 500 since the start of the year. I am cautious now for the short term on where the market's heading to. As many of you will know, it's not like we've been bearish for the last few months. We've been quite positive and optimistic on where the markets can head to. For the first, since the end of March, we've been fairly optimistic. Markets have done pretty well. If anything, they've surprised on the upside. But I just want to let you know now's the time to get a bit cautious. So if we have a look at the trend from end of March, basically we've got an uptrend here that was broken a couple of weeks ago, and what it's tried to do is retest the underneath of that, and now it's failing. So in terms of the US market, just zoom in a bit more, the key test, of course, is this point here, so this previous low. So we're very close to that, and I think if it was to breach this low, there'll be a whole heap of stop losses sitting right under that, and if the rug gets pulled from underneath it, I think you'll see a bit of a sell-off. So, I mean, in terms of support levels, you know, you'd be looking at roughly around this sort of 2800 region, close to 2700. It's impossible to know where the market will then turn around. I mean, that's the key point. We'll just have to watch the market price action develop and then just take it from there. And, you know, as soon as we get a signal that it wants to rally, then we know that it'd be time to get back in. So if we have a look at the way it fell away across February, March, you know, I'm not expecting the market to come back to these March levels. But in terms of the US market, it started to give us clues. It was ready to bounce. If you have a look at the RSI, it actually bottomed out at the end of February, which means as the markets continued to fall, momentum was actually heading up. So that was an interesting sign. And as soon as we had a few up days in a row, crossing on the MACD, you know, that was essentially the buy signal. So, you know, I'll be looking for something similar this time around. If we have a look at the Aussie market, you know, it's done very well. I mean, the last time I did one of these videos, we're looking at, you know, the breakout here and a move to 6,000. And then what I guess caused me to get a little bit cautious over the last couple of weeks is this price action just here. So this big down day after a rally up. So you get this sort of reversal sign here, bit of a sell-off, a struggle to rally, and now it's looking weak again. So I think at best the market goes sideways for a while, which is similar to what we saw here in April, May. But there is a risk that we come back to this 5,500 level. And if 5,500 doesn't hold, we're looking at about 5,200. But again, we don't need to get ahead of ourselves. I think for the moment, the risk to the market is more to the downside than to the upside. We just have to keep an eye on it, and you know, whether it wants to turn around here or there, you know, I'll just be obviously keeping an eye out for the signs that that it wants to reverse. So that's the main takeaway from the video today. Just no need to be rushing into a lot of things here. I think it's prudent to just sit on the sidelines for, you know, potentially the next couple of weeks or so, wait for the buy signal, and that's when we can start stepping back in, because beyond the short-term weakness, I still think our market can head higher. And just one final note, just remember we do have the end of financial year offer ending on the 30th of June, which is the half price deal. So that's the $39 that you can pay for our research every month. It is monthly, so after 1 month you can cancel it. We won't increase the price. on you. So it's worth giving it a go and staying in touch with our latest ideas and our latest views on the market.